Hello and welcome. I'm John Darwin here at Merit Advisory Partners, and I want to address the influx of questions I've had from clients, friends, family, strangers about the tariffs and the implications of the tariffs, the possible outcomes. There's several things we need to talk about. First, the tariff itself, then the kind of investor you are, and then what you can do about it. Now, to start with the tariffs, in my predictions on that, and I'm just a man, I'm like everyone else, I'm just guessing. But I've noticed in my clients odd optimism. It's strange that not too many people are calling worried about their account. In their minds, we're in Southeast Texas, this is kind of what they voted for. They knew going into this recession, this downturn, whatever you want to call it, that this was going to happen. It's odd in the sense that we've had plenty of warning. Big heads up, we even had all the whole Liberation Day. But I want them to pump the brakes on that maybe because I don't want to get political. I'm just going over what I remember. There was a speech the president gave where he said, "We're going to win and win and win, and we're going to win so much, you're going to say, stop. We can't handle winning this much." That may be an offhand comment, but let's break down what that could mean because more often than not, he kind of says what he does, love him or hate him. And again, not picking sides here, but what a lot of my clients think winning is we're going to tank the economy with these tariffs. They've been announced, we know about them, and then we're going to get all the other countries and economic powers to the table and renegotiate trade deals. We're going to renegotiate terms, and we're going to be in a better place than when we started. That is winning. I will agree with that. But equally possible, and nobody knows except the man himself, equally possible is the idea that we're going to put the tariffs on the world. We're going to keep them there. They're not a negotiating tool. And what we're going to do instead is we're going to move all manufacturing back to the U.S., make ourselves self-sustainable. We're going to have higher priced goods, but more jobs, and we're not going to rely on these countries that have been giving us bad deals and terms for so long. That is winning so much you're going to be sick of winning, because what that means, the first one's short term, maybe a couple months of down, and then it'll pop right back up. The second one, factories need to be built. The world needs to be reorganized. Trade routes need to be reorganized. Long-term downturn, high-priced goods. Again, long-term. These are two very different kinds of winning. And one of the problems I'm seeing is people call, typically oddly elated, is that they assume the first without considering the second. And you need to be prepared for two completely different strategies if you're depending on which of these outcomes happens. Which leads me to part two, investing. A lot of our clients, we're money managers, we're financial advisors. They're in it for the long haul. They don't touch their money very much. They take the withdrawal out to live off of, but we're not picking and trading stocks. We have a strategy. When times like this happen, you have long-term investors, suddenly thinking like day traders. Let me use a car example to get this across. We're just going to pick on two kinds of car owners. There's the guy who gets the 60s Jaguar, who drives it 6 miles a year, trailers it around to car shows, drives it maybe a couple feet in the parking lot to the where he parks, and then people watch it, then he trailers it back home, restores it, sells it for a profit years in the future. And then there's somebody who they're going to buy an economy car, they're going to buy something sensible like a Corolla, maybe sell it in the future, but the way they're going to get their money out of it is by using it to get reliably from work. They're going to put the miles on that car. The problem, those are both completely viable. The problem is when the daily driver who's going to make his money out of his car by getting to work, by hauling things, by using the car as a tool, when that guy, and this is typical, this was how I thought in high school, when that guy wants a 60s Jaguar as a daily driver, it is a complete disaster. The same thing happens when volatility strikes, markets are moving up and down, you don't have a plan, and you start thinking it from the point of view of a long-term investor who's only had either money managed by a firm or a 401k where they're not daily actively trading this thing. When those folks start thinking like a day trader, when they start calling me and asking if they should buy or sell based on the daily news cycle, that is a problem. Because those people, day trading is very optimal. You can make a lot of money day trading, but day trading is not investing. Day trading is a full-time job. Your hours are market open to market close on average. There's some wiggle room there. There's forex and there's after hours trading, but typically your average day trader who's watching the news cycle, watching the daily activity of the market, is a completely different kind of person than your investor saving for retirement, saving for long-term growth. You don't mix the two. Okay? Let's get that straight. You do not mix the two. You're one or the other, and you need to, I don't know which one you are. I'm not making a recommendation. I'm not making a value judgment on which is better. You have to look in the mirror and decide, are you a day trader? Can you trade more than 3 times a day? Or are you a long-term investor who is emotionally charged right now with everything going on and you are wanting to make quick decisions? If you are that long-term trader, you are more than welcome to open an Acorn account or a Robinhood account or Webull. Have a little bit of fun on the side. You can practice day trading, but when you start doing that with your nest egg money, that almost never goes well. Think to yourself right now, here's an experiment. You need to think about all the times you had a coworker or a family member or a friend tell you that they impulse bought or sold a stock and now they're retiring. It almost never happens. Not a good idea. I've been on both ends. I manage funds now. When I was younger, I day traded. Day traders, the people who make quick decisions like that, we're reading SMA lines, EMA lines, we're looking at the float, we're looking at the volume of trades, we're looking at all kinds of things, supports, resistances, flags, bull traps, bear traps. We're looking at all kinds of stuff to make these decisions. So if you are not that kind of person and you suddenly feel the impulse to buy or sell, I would urge you, for your own sake, to just wait, to think about a plan. This is a cliche, but you're going to hear it from me a whole lot. Those who fail to plan to fail. And in your plan, you need to have a point A and a point B, and you need to know what happens if things go up or down. If somebody calls me and asks, should I buy into the market right now, I want to ask them why. I need to know reasoning. I'll do whatever you want, but for the sake of a good decision, please give me your reasoning. Please show your work. And an important thing, did you know you were going to buy here now that it's fallen back when you were on top? Or is this a daily decision? For example, today is the 9th of April, 2025. Yesterday, market shot up after going down from the tariffs on a fake news article. It was out there that there may be a 90-day hold on the tariffs. Market shot up. Turns out that was complete fake news. I had several people call and ask if it was time to get back in based on a fake news article. Here's a little bit of advice. So many bad decisions will be saved if you're a long-term investor by just not looking daily. It's hard to do. It's very hard to do. But oftentimes this is more of a life thing. People feel the need to watch the news all the time or watch the market all the time or watch this or that all the time because they think there's this perception that if you're always on top of it, always watching it, you're somehow doing your civic duty, you're informed. But let me tell you, if you watch the news every day, you're watching a bunch of things that you can't affect and it's ruining your day. You might treat your family worse, you might treat clients worse, you might be in a worse mood on a beautiful day because you watch news about things you have no control over. When you're watching the market daily and you're a long-term investor, bad idea, because you're going to have all kinds of thoughts come through your head, all kinds of spur-of-the-moment decisions off off these things that the day traders know. When an article comes out and the market pops up, day traders know that it's going to close lower than it popped up. They're going to know why you're not, unless you've been trained in that, unless you've really spent months, years even, figuring out how daily market activity affects things. These are things we need to know. I'll end with this. You need to have a plan. I'll say it again. Those who fail to plan to fail. When we're going through this tariff turmoil, we don't know what the outcome's going to be. We don't know if this is a short-term negotiating tool. We don't know if he's planning to restructure the global economy in the long term for the next 20, 50 years. A lot of things in the next year in your portfolio depend on what the president's thinking. And nobody knows what he's thinking except him. So have a plan. If you don't already have one, either make one yourself or go find a financial advisor that you trust. If you're not a DIY person, go to a professional, figure out a plan, figure out a portfolio, and stick to it as best you can. There is room for maneuvering. If something big happens, something substantial happens, an agreement changes between us and China or us and the EU, we can talk about maybe changing course. But if you're looking at the daily right now, worst thing you could do. Markets go up and down 6 to 10% based on a tweet. So when you're looking at that activity, you're getting bad intel for the long run, good intel if you're a day trader. You need to know which one you are. So that's basically my thoughts on the tariffs and what you should do about it. I'm not giving financial advice in this video. That's on a person-to-person basis. If you want to talk or meet, feel free to message me, do Zoom or something like that. But broad advice, have a plan, stick to it, do not get carried away in the emotions, because whatever you and your coworkers and the drive-through worker at your favorite restaurant are thinking the market's going to do, the hedge fund managers, the world leaders making the trade agreements, all these other people are probably thinking something very different. It's so important to know that. It's so important to know your limits, to know what kind of trader you are, and to know what you're going to do when things go this high, when things go this low. Know when you're going to get out and in before you have to make the decision. That'll save you so much trouble in the long run. I promise. You won't win all of them. You won't lose all of them. You might miss some runs up. You might take some losses. But if you just plan well, you will be in the game. You'll still have a life after all this is over. There are lots of people that are going to get very rich off of this tariff stuff. There are lots of people that are going to lose everything off this tariff stuff. If you're not in the front lines of the market, day trading or managing hedge funds or hammering out trade agreements, what you should be focused on, especially my clientele, older retirees, is just making it through this. It's okay to miss on some gains if you walk away from this whole. If you walk away from this with a life on the other side, with resources on the other side, it's okay to miss some gains. Don't take all the losses unless you know what you're doing. That's it for today. Thank you very much. Again, not very technical, but I hope this helps you think about how to think about things. I urge you to be careful at times like this. It's so unpredictable. It's extremely unpredictable. Whatever you think is going to happen, double check it. Think about what else could happen. I'll leave it at that. Thank you very much, and I'll see y'all on the next video. Bye-bye.